Economic recovery? Really? I don't think so. We had another broad sell-off today in the stock market. And we also had another down day on the financials. So we have to ask ourselves, was today just a day of profit taking for these financials, or is it a broader sell-off? More of the buy the rumor, sell the fact. I think that's what we're seeing right now, is the fact that people have had more time to take a look at these bank stress tests, take a look at some of the other indicators in the economy, and have realized that these banks have nowhere near the capital that they're going to need and are going to continue to bleed red ink. In fact, in the news today, foreclosures are on the rise, and Realty Track data said April's foreclosures were up 32% from a year ago and slightly up from March. It was the second straight month that more than 340,000 U.S. households received a foreclosure filing. So what we're seeing is these foreclosures taking place because, see, in the past, the banks had actually extended the amount of time that they were giving these homeowners. They had received notices of default, but they were not actually foreclosing on the properties. And the reason why is because that does not look healthy on a bank balance sheet if you foreclose, and they were to take a look at the loan that was made on the property and then the amount that they ended up with, actually either after auctioning the house off or doing a short sale on it. They don't want to eat that. So they tried to postpone this as long as they possibly can, and now we're starting to see some of these numbers come to the surface. Retail sales were also down. Now, Macy's Incorporated offered another sign that consumer spending is not on the rebound. The department store had a loss in the first quarter that widened to $88 million from a year ago. Now, a little while back, I'm sure you noticed that we had a little bounce in consumer spending. And if you analyze basically what was going on with these foreclosures that we're seeing today, is that when people got behind on their mortgages and just kind of threw the towel in and decided that they weren't going to be able to continue to make the payment, they spent that money on other things. They went out to restaurants, they made purchases, they took maybe vacations, things of that nature. That's why we saw consumer spending up, because all of a sudden now you have these people that have this so-called extra disposable income. That's not going to continue. These people, when they get foreclosed on, are going to have to find another place to live. So that's going to be fairly short-lived. Also, information today as far as GM and Chrysler are going to be closing 3,000 dealerships across the country. That is over 200,000 jobs that will be lost from these dealerships. It also impacts these local economies, and it impacts the individual states, because the states depend on that sales tax revenue. I know we do here in California. And it also affects, like I said, the broader economy of the area of these dealerships, because dealerships, you know, they support a lot in the community. They do a lot. Everything from sponsoring softball teams to charity events and things of that nature, and we are going to definitely see an impact in all of that when these places close up. One thing that has concerned me is the fact that we have been having some closed door dealings going on with General Motors and their bankruptcy that should be taking place, or should be filed by the end of this month. And it also has been going on with Chrysler in the bankruptcy courts. And that is the fact that the capital structures are not being honored, and they're not being honored in the courts. And what that means is that if you're a debt holder in a corporation, if you're a bond holder, that you get paid less interest on your money for your investment, but you become a senior debt holder, meaning that the common shareholders, the preferred shareholders are supposed to end up going down first, and then of course the bond holders are usually pretty safe. It's a pretty safe bet. And in fact, a lot of pension funds and things of that nature will buy bonds in corporations. But with what we're seeing taking place, these capital structures are not being followed, and that is a grave concern for private capital in the markets, because people out there that want to invest are going to think twice about putting any money into any company or financial institution that has received any TARP money, because the government will change the rules and could virtually just blow up their entire investment. So that's going to scare private capital, especially in the courts. When the courts are kind of changing the rules, that becomes extremely concerning to all of us, because we are a nation of laws. And once we start down that slippery slope, who draws the line and says, okay, this is it, and we're not going to go any further. Now, I live in California, and in California we have a special election that is coming up Tuesday of next week, and we are to vote on 6 propositions, 5 of which will have a impact on the state's budget. Now, of course, what they want to do is they want to extend some taxes that they basically have imposed on us for an additional 2 years, such as sales tax and income tax and the increase on our vehicle registration fees. And I am definitely not behind these propositions. I think that both the states and the federal government need to scale back, and we need to start living within our means, because if we don't, the bond market will do it for us, and that could be catastrophic. And like I said, here in some counties in the state of California, sales tax is near 10%. They've increased our personal income tax by 1/4%. They've increased, doubled the vehicle registration fees in the state. And for instance, I have one of my work vans, which is a 2004 Chevy van, and it's going to cost me nearly $300 just to register that this coming year. So my confidence is really slipping in any hopes of a recovery, and I must say that I have greater concerns over the fact that the government will be able to continue to finance these huge budget deficits, and we must all really prepare for the reality of a possibility of a default on our government debt. Now again, I'm not a doom and gloomer, but I am a realist, and I'm pretty good at math, and I've seen the numbers. And one impact that this is definitely going to have is it's going to alter all of our lifestyles and the very way of life forever in this country. And you might want to start thinking through how you can prepare for such a scenario down the road. There are some very good videos here that I've seen on YouTube, and I myself have been somewhat preparing, not on any type of a panic level, but it is a reality. And the more that I see things that are taking place, and especially, like I said, in our very courts, where rules are being ignored because of a concern about the economic conditions, we don't want to go there. We need to stick to these rules. We need to make sure that people have confidence when they make an investment in a company that those capital structures are going to be honored. Okay? Well, thank you for tuning in, and I should be making another video here fairly soon. It all depends, of course, on what happens within the markets and any news on the economy over the next couple days. Thank you.